Hey YouTube, this is the Robinhood Investor. Hope you had a great day of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about Goldman Sachs, ticker symbol GS, which reported earnings yesterday. Make sure you stick to the end of the video for my opinion on this stock. So Goldman Sachs is currently priced at $218 per share. Past year, up 1.76%. Past 5 years, up 4.37%. So capital appreciation hasn't been much. Scrolling down a bit, market cap is $75 billion. P ratio is 11.63, and dividend yield is 2.34%. Now taking a look at the earnings, you can see actual EPS, earnings per share, $6.26, which beat the expected earnings per share of $3.78, which is very good to hear. Goldman, if you're not familiar, engages in global investment banking, securities, and investment management, which provides financial services. So so this is in the financial industry. I consider it a big bank. Now taking a look at the actual earnings report. This is for Q2 2020. And you can see the results snapshot. Net revenue second quarter, $13.3 billion. Year-to-date second quarter, $22.04 billion. Annualized return on equity, 11.1%, double digit, which is great to see. Year-to-date is 8.4%. Net earnings is $2.42 billion. Year-to-date, $3.64 billion. Annualized ROTE, 11.8%. Earnings per share of $6.26. You can see a lot of it is from the second quarter versus year-to-date is $9.36. Now some of the highlights, you can see it's second highest quarterly net revenues. So it's good to see that positive news. Record quarterly investment banking net revenue. So in that service category, investment banking was a record. And number one in announced and completed M&A, mergers and acquisitions. Number one in equity and equity-related offerings. Highest quarterly FICC net revenues in 9 years. So good to see that relative track record. This is the highest quarterly FICC net revenues and highest quarterly equities net revenues in 11 years. So good to see the highest relative to the past. Record AUS and the standard CET ratio increased 110 basis points quarter over quarter to 13.6%. So overall, these are pretty good highlights of the performance. Now, some of the macro factors that impacted Goldman is the shutdown impact and recent negative news. Economy is beginning to reopen, so that could definitely be a positive driver. Continue monetary and fiscal stimulus, so that definitely helped with spending, both from consumers as well as corporations. In terms of economic fundamentals, you can see near-term contraction followed by recovery. So GDP growth, 2020 versus 2021. U.S. was negative 4.6%, and then positive 5.8%. Global negative 3.4% versus positive 6.2%. Now, some challenging fundamentals and improving sentiment. Shape of recovery unknown. So it doesn't seem like there's going to be a recovery anytime soon from the recent negative news. Unemployment and spending better than expected. So it's good to see that it's better than what's forecasted. Low CEO confidence, rising investor sentiment. So the C-suite doesn't have confidence going forward, but there's a lot of positive investor sentiment. Also, despite economic challenges, market rebounds drove client activity and improving sentiment. So even though the economy is challenging overall from decrease in employment as well as increase in unemployment and decrease in wage growth, overall market rebound from the client activity. So recoveries in equity market, S&P 500, plus 20% in second quarter, MSCI World, plus 19% in second quarter. Credit spreads normalized in the US and Europe. So you can see that for US down 85 basis points quarter over quarter, and Europe down 100 basis points quarter over quarter. Volatility and volumes remain elevated. So volatility is like the movement of the assets. So down 43% quarter over quarter, up 102% year over year. As for US cash equity volumes, up 78% year over year. So overall, pretty positive in terms of market movement and cash equity volumes. Now for the financial overview, you can see these are the different services they provide: investment banking, global markets, asset management, consumer wealth management. So relative to the first quarter, it's for investment banking up 22%, global markets up 39%, asset management NM. I think that's like, what does that mean? I guess it's like at the status quo and not much movement. Consumer wealth management down 9%. So overall, a lot of the growth is global markets and investment banking. Now, in terms of year over year versus second quarter 2019, overall, you can see very positive growth in investment banking up 36%, global markets up 93%, asset management down 18%, and consumer wealth management 9%. So a lot of growth in global markets and investment banking. Scrolling down a bit, you can see net revenues relative to first quarter, it's up 52%, and year over year of 41%. So it's great to see that double-digit growth. So overall, you can see relative to for pre-tax earnings, you can see relative to first quarter of 145%, which is solid growth quarter over quarter. Year over year up 6% in terms of pre-tax earnings. Now for diluted EPS, you can see $6.26, which is 101% greater than the previous quarter and 8% year over year. So it's great to see that positive trend, positive growth. Return on equity, 11.1%, and ROTE, 11.8%. So efficiency ratio, 63.2%. Overall, these are very positive financials, positive numbers. I think look at the overview highlights. The net revenues were significantly higher, reflecting higher net revenues in global markets and investment banking, and higher net revenues in consumer and wealth management, partially offset by lower net revenues in asset management. So a lot of growth in global markets and investment banking. For Q2, provision for credit losses was significantly higher, primarily due to revisions to forecasts of expected deterioration in broader economic environment. Now for individual impairments related to wholesales, loans during the quarter, operating expenses increased year over year, primarily due to higher compensation and benefits expenses, reflecting significantly higher net revenues and net provisions for litigation and regulatory proceedings. So it seems like overall their expenses increased, but their revenue also increased. So good to see very positive news in terms of financials. Taking a look at the key stats. So for Goldman Sachs key stats, you can see trailing PE is 11.83, which is pretty good relative to financial industry. Forward PE is 10.11. Scrolling down a bit, you can see 52-week change is 1.11%, which is underperforming relative to the S&P 500. And the 200-day moving average is 200. In terms of share stats, you can see held by institutions is 76.2%. So a lot of institutions hold this stock. For dividend yield, you can see trailing, which is past 12 months, at 2.12%. Forward is 2.31%. Payout ratio is actually very good, so 24.96%. We want to see this number typically below 50%. So to see this dividend sustainable at 24%, that's very good. This is relative to their earnings. Profit margin is pretty solid at 21.4%. Operating margin in trailing 12 months is 30.54%. So it's a very profitable business. And it's even better to see that there are different categories in services. They're also growing. So very profitable. Management effectiveness, return on assets, 0.74%, and return on equity, 8.02%. Revenue is $34 billion. Quarterly revenue growth year over year, down 9.1%. Gross profit of $31 billion. Net income is $6.81 billion. Quarterly earnings growth, down 46.1%. Now, in terms of balance sheet, they have a solid cash position at $675 billion. Total debt, $473 billion. Debt to equity, so for every dollar equity they have $506 in debt. And operating cash flow at $15.21 billion. Also taking a look at the financials, you can see year over year, it's been steadily increasing. Same goes for the earnings. Now for quarter, you can see it's also very, it doesn't show Q2 yet, but Q2 is very solid this recent quarter. So overall, Goldman Sachs, it's a very solid company, solid financials, strong growth potential. And during these volatile times, that's when they make a lot of their money. And I don't hold Goldman Sachs position at the moment, but I do have exposure to it from my S&P 500 ETF. And yeah, I plan to continue holding that position in the long term. That's all for this video. What are your thoughts on Goldman Sachs? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. See you in the next video.